Good morning, everyone. The minutes of the March FOMC meeting confirm the committee's growing interest in tapering off quantitative easing when the data allow. The key section read as follows. Many participants expressed the view that continued solid improvement in the outlook for the labor market could prompt the committee to slow the pace of purchases beginning at some point over the next several meetings. The statement was much more specific and shows greater consensus than at the statement at the previous meeting. Previously, they said several participants, notice several, not many, emphasized that the committee should be prepared to vary the pace of asset purchases. Vary, not slow. So they were much more specific and much more warning about tapering off the purchases in this comment. The FOMC is clearly building a consensus towards tapering off quantitative easing if and when the data allow. That should help to support the dollar as other countries remain committed to quantitative easing, notably Japan and the UK. In that light, today's weekly initial jobless claims will be closely scrutinized in view of the statement that continued solid improvement in the outlook for the labor market is a necessary precondition to tapering off quantitative easing. The market's expecting that last week's jump in initial jobless claims to 385,000 was a fluke, and that they will fall back to 365,000 this week, well, which would be only a bit higher than 357,000 of 2 weeks ago. That would probably confirm the hawkish message from the FOMC and boost the dollar. If, on the other hand, today's jobless claims corroborate the picture of a weak employment market that last week's non-farm payrolls painted, then it would make an early end to quantitative easing less likely, and the dollar would probably weaken as a result. Eurodollar traded between resistance and support yesterday, closing lower following the FOMC minutes, with support at 130.75 now acting as resistance. Support now looks to come at 130.10, with stronger Fibonacci support at 129.80. Resistance may come at 131.10, with spike trendline resistance coming at 131.60. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.